you're doing well. Welcome to this new lecture of the 2025 model series. This lecture is in a bit of a different format than what you're used to within this series, and the reason why is because I want to create a raw lecture for you in which I share with you how to actually investigate what I've taught so far. I've taught a lot already within this model series, and therefore it's important that you do not forget about going into the chart yourself and actually investigating what I've outlined. However, I understand that can be quite tricky, and therefore I want to give you some examples of how you can actually go into the charts and investigate everything which I've taught so far, but also log it. Therefore, I'm going to be using the opportunity logging tool, which has been provided within my mentorship. I will share with you where you can claim access to it. You can claim access to this Notion database, which I'm going to show to you now, right here. You can claim access to it by going to the description, and you're able to see a link there. If you press on that link, you'll be able to find the steps to copy and paste this Notion, and we're going to be using this Notion to just basically outline some opportunities, and so that you're able to get a grasp of how I'm actually going into the chart myself and how I actually backtest myself. Now, when it comes to backtesting, what a lot of people do is they utilize the replay tool, and they place the replay to wherever, and they just go candle by candle, and they try to basically predict what's going to happen next within delivery that has already occurred, right? I'm sure that some of you are probably like, damn, you just nailed me. Yes. However, I do not believe that that's an effective way of backtesting. And the reason why is because your goal throughout backtesting is to train your eye to see algorithmic signatures. It is to train your eye to see these repeating phenomena within the delivery of price. Therefore, your job is to play a volume game where you're able to say, okay, I'm going to get a lot of examples of these same algorithmic signatures taking place, and therefore I know that this is what's going to happen next when I see a similar situation in the future. Meaning, my opinion of backtesting is that backtesting should merely function as a data collecting tool. Meaning, all I want you to start thinking about when you come to the charts with the desire to look at historical market data is to train your eye to improve your ability to see these signatures within the delivery of price, so that in the future when you're looking at the live markets and you're looking to tape read or you're looking to demo trade, that you're able to recognize them. And therefore I'm going to show to you how I go about this. So first of all, my main objective is the following. My main objective is to determine what the hard time from institutional order flow is. Over these past couple of months, we have been bearish on the indices, and in front of you, you have the daily chart of the Nasdaq, by the way. Because we have been bearish on the Nasdaq, what it means is that we have been looking for lower prices, and therefore we are going to be looking at shorting opportunities which present itself throughout this repricing lower. You might be wondering, how do you know that the institutional order flow is bearish? How do you know that the market was being repriced towards the downside? Well, there's a lot which we can discuss in order to confirm that we were in a sell program. But for now, I would like you to understand that when we pay attention to this delivery here, what I would like you to see is that on the bottom right here, we see time. And what this represents is it represents basically the months. Because in front of you have a daily chart, and you can see that we have January, February, March, April. Yes? My eye is immediately always drawn to where are the previous month's high and the previous month's low. I'm just going to show you where the January low is. The January low is right here. And when we pay attention to where the January high is, what I would like to see is that the January high is up here. Throughout the month of February, which opened up right here, and by the way, I walked you all through this live in real time when the market was delivering, so don't think, oh, he's just sitting in hindsight. No, if you paid attention to the market reviews at the time, you will have seen that I literally outlined this full sell program before it occurred, targeting sell-side liquidity pool objectives. But what I would like to see is that February we opened up, ran up higher, took out January high, but did not utilize the January high as support on price. Eventually, the market rolled over inside of this box right here. And I have severe OCD, by the way, so I need to make sure that everything is just clean, and that is what you will notice. So I apologize that this is going to be a very raw lecture, but I hope that you will find great benefit in seeing how I'm actually coming to the charts and actually basically going about my day-to-day process. Because this is so important that these small little details get investigated. So what I would like you to see is that the market failed to utilize the general high support and price, rolled over. What is it drawn towards? Well, the market is drawn towards January low, which is right here. Notice that we slammed through that low with this big downward candle, and we then see something get created right here. What gets created? We see a CB get created. We can extend this CB to the right here. And the reason why is because as long as this CB functions as resistance from price, we are bearish and we are expecting lower prices to come in. But when you pay attention to the January low, the candle itself, what you can see is that I can extend that to the right as well. And what do you notice? We expanded below the January low. And do you see how we retrace into the higher end of the January low? We wick above it, but notice that the bodies keep on closing inside of this. This shows to you that a continuation model is in play. Where at first we saw a purge and reverse from January high to January low, we are now seeing continuation taking place. And when you see continuation taking place, you can anticipate that we're going to see further repricing lower. See the market expand towards the downside, and what I would like to see is that every single premium array which got created functioned as resistance from price. And that is a crucial insight which I would like to share with you. Now, what we see eventually is that the market expands lower and it slowly begins to grind towards the upside. We see a retracement taking place into equilibrium of that monthly range up until that point. We see SMT get established and the market expands towards the downside. Notice that we see this large DACB get created. We see the market retrace into that DACB and then expand towards the downside. So now that we have defined that the underlying order flow has been bearish, what I'm going to do is I'm going to press right here on the top right where it says this screen, the camera, my bad, sorry. And I'm going to press on take a snapshot. I'm going to press on copy image and I'm going to go to the Notion tool. And what I'm going to do is I'm going to create a new page right here. And this new page is going to be filled with the opportunities which we're going to log now. I'm going to copy paste the image which I've just collected. And this is the daily chart of Nasdaq. The next chart which I'm going to log is the hourly chart of Nasdaq. So when we go to the hourly chart, the next chart which I'm going to log is the following. When we go to the hourly chart of Nasdaq, what I would like you to see is that when we pay attention to this past week's delivery, it's important to note that we have seen a trending week where the market initially opened up, ran up higher, and eventually it began rolling over. When we pay attention to this week, I would like you to understand that literally every single swing point right here was absolutely algorithmically driven, meaning every single swing point was anticipated. And that right there is something which I want to show to you. And that's what we're going to be looking at during this raw lecture. All right. First of all, let us begin with Monday. On Monday, I outlined that I would be monitoring the 90,000 price level. The 90,000 price level was my objective that I anticipated price to draw towards. You know what? Let's actually do it fully how I'm doing it when I'm actually going through logging all the charts and such. What I do is I place the replay tool right here on the day itself and I go to the APR indicator. And what I actually do is I place the ranges right here on 1,000 because we're looking at Nasdaq. And then I have the ranges. What I would like to see is that we saw the market stop right in advance of that 90,000 price level when we formed this low right here. So we engineered sell-side liquidity right here. We saw the market consolidate for a while and we saw it go back and forth, back and forth, back and forth. Eventually the New York morning session opens up and we see the market begin to expand towards the downside. Notice that the market reaches that 90,000 price level, we just step below it and we then form a low and begin expanding towards the upside. Now, when we pay attention to a swing formation like this, because that is what our focus is going to be on, recognizing market swings, it's important to note that we pay attention to time cycles and price cycles, and we could even look at PD arrays, but in this case, I do not need any PD arrays because we're at levels which have been met a long time ago, we have to go far back into the past before you could even see any arrays, and therefore it's simply not worth it looking at the arrays. Simply focus on the time cycles and key levels. But what I would like to see is that we see liquidity be engineered in advance of what? In advance of that 90,000 price level right here. What low is this? This is the Asia low. When we pay attention to where the London low formed, what I would like to see is that the London low formed right here. So the London low also formed in advance of that 90,000 price level. So what exactly does New York do? Well, what New York does is that it opens low, drops into this 90,000 price level, and this full leg, which I'm outlining now from the New York Open, which takes place at 7 a.m. to the absolute low, which forms, that right there is manipulation which is taking place. We just wick below that 90,000 price level and we see the market eventually expand towards the upside, drawing towards the new week opening gap, which is right here. What I would like you to see is that inside of this delivery, there are a few things which you can recognize from that RE chart already. You can recognize the engineering of liquidity, you can recognize the influence of time cycles, and you can recognize where manipulation is taking place. So what I'm basically going to do is I'm going to outline this to be the Asia low, and I want you to keep in mind that the London low is right here. And I'm going to save this chart, and we're just going to stick to the RE chart, by the way. I'm just showing to you how you can recognize these opportunities on the higher time frames at first, where you can short into that 90,000 price level like I did, and you can also buy afterwards like I did as well, because that is the power of this information. I'm not saying that you should go out here and trade based upon this information. I'm just sharing with you my thought process and my logic, and this is a real raw insight on how I'm actually doing so. So what we're then going to do is we're going to type H1 early, and we're going to log that. And the reason why we're just going to stick to the RE chart is because I want you to understand that based upon the RE chart, you can already see these moves taking place. Meaning, all you need to define is you need to define where the draw on liquidity is and where the point of interest is within a trending market. So what we're going to do is we're going to log the date. This date was the 31st of March. The day was Monday. Market was Nasdaq. Session was New York AM, since looking at that opportunity. Newsday, we would have to go to the Forex Factory and actually check whether or not there was news on that day. SMR time, we're not going to log now. SMT, we're also not going to log now. We're simply focusing on everything which we can look at from the RE chart. If you are familiar with these variables above and you have already studied the 2024 model series, then I suggest you to just go into the lower time frames and investigate them. But for now, we're focused on the following. We're focused on the draw on liquidity and the point of interest. Now, here it's interesting to note that the draw on liquidity could be that 90,000 price level for the sell program, and it could also be, for example, the buy liquidity pool for that buy program afterwards. But for now, what we're going to do is we're going to log simply the sell program. So the Asia low was the draw on liquidity, and what was the objective? The objective was the range low, and this is something which I did not put in the Notion database at first when I released it. Point of interest then, well, the point of interest when we pay attention to this delivery right here is what? Do you see this 19,250 price level? Do you see 25% of this range? Do you see how the market opened up, went higher, and then eventually formed the high of London around that area? That right there shows to you that this is the A to B which is taking place. A to B. That's a very bad A and it's a very bad B, but I'm using the wrong drawing tool for this. But that's the A to B. Eventually B turns into A. So what you can see is that you can simply play this range back and forth until we displace outside of it. You know what? Since we're doing it all right now raw, no, I'm not going to save that one. It's clear. And some of you probably already clicked off, so they wouldn't have understood that. Doesn't matter. All right. Point of interest is going to be the 25% of the range. and the entry pattern, etc. we're going to leave out. However, what I want you to pay attention to is the following. I would like you to pay attention to what these sessions did, and the reason why is because this is a very important thing to log when it comes to daily delivery profiles. The Asia session was a consolidation because the market was simply going back and forth. The London session was also a consolidation. However, the morning session was an expansion. Meaning, what you can see is that when we pay attention to the chart, what I would like you to see is that throughout both Asia and London, the market didn't really do anything. It just went sideways. Meaning, you can see that it just consolidated, consolidated, consolidated. We then, however, see the London session also consolidate. The New York morning session expands towards the downside. But hey, a consolidation followed by an expansion into a draw liquidity, into a POI, could be manipulation to do what? To then reverse and expand towards the opposing side. Expand lower, expand higher. Shorting opportunities, buying opportunities. So what we're going to look at then within our database is the following. What we're going to be looking at is both a market maker sell model as market maker buy model. So technically speaking, we're doing two logs at once now, where you could short into that 90,000 price level and you could look to go long from there. Meaning this is a short, this is a buy. And both are valid. So therefore, we're simply going to log just one for the sake of simplicity. However, I would like you to understand that you can log both opportunities here. And eventually, what is possible is that as we proceed with the future parts of this model series, I will show you how to log more specific variables as well within these databases, and we might actually add some variables here and there. What I'm just going to do is I'm going to type out range high as well, and the reason why is because that's an important log. And next at point of interest also 75% range low, range high. Now, when we pay attention to the charts again, what I would like you to see is the following. What I would like you to see is that we saw the market expand higher from that 90,000 price level. I'm just going to remove my drawings because we're going to continue to the next walk. I outlined throughout my review on Tuesday on this day that I anticipated that as long as we would not see the market displace below this, we see right here, I would anticipate that we would likely draw towards the upside. What was my eye drawn towards? Well, my eye was initially drawn towards 90,500 price level right here. And the reason why is because what do you see? You see that we stopped on Monday right in advance of that level. And therefore what you see is that this is engineered buy-side liquidity. So what I'm looking for is the following. I'm looking for the market to expand towards that level. And what do you see here? Do you see how the market repriced higher, drawing towards that buy-side liquidity pool, reaching that 90,500 price level and then rejects it right here? This right here shows you that buying opportunities present itself throughout this run higher, and that shorting opportunities present itself after. And again, because the hard time from institutional order flow is bearish, I'm more interested in the shorting opportunity. And therefore what we're going to do is we're going to be looking at this delivery and we're going to be logging it within our journal again, within our database. What I would like to see is that we see the market expand towards that previous day high, which is right here, throughout the London session. We see the market eventually take out previous day high, and we see the market reach that 90,500 price level. Do you also see how the market reached a daily CB by doing so? Because remember on the daily chart, this was the daily CB which I had outlined. When we pay attention to the RE chart then, what I would like you to see is that the market repriced higher, taking out the previous day high, reaching the daily CB, reaching the 90,500 price level, forming daily SMT with a yes, and then repriced towards the downside. What do you see? You see a perfect swing high formation, and therefore on the lower time frames this is a market maker sell model which is present, and specifically within these three candles, but maybe I'll discuss that later. Therefore, what we're going to focus on is the following. This whole run higher, I'm just going to make that annotation. Whole run higher right here is all manipulation. And therefore that run higher is all the engineering of sell-side liquidity. They're trapping people into believing higher prices are next. And they're actually making them believe that they should go long on the market now engineering sell-side liquidity so that when enough buy-side liquidity has been taken out, we will revert towards sell-side liquidity. So what we're going to do is we're going to copy this image and we're going to go back to the Notion, and what we're going to do is the following. I'm simply going to put right here that this is log number 2, because what you can see is that we also put numbers here. And the reason why is because I want you to start keeping track of how many logs you're actually doing and how many chart examples you're actually getting. So this day was the 1st of April 2025. It was Tuesday. The session was the London session. Market was the Nasdaq. MXM, market maker sell model. News, we would have to check that on the Forex Factory, which we're not going to do today. If you want to fill in this news day right here, always go to Forex Factory for your historical logs and find whether or not there was news on the day. SMR time, we can also ignore for now next to SMT. Well, you know what, I already mentioned that there was SMT with ES, so I'm just going to log it. And the draw liquidity in this case was the following. The draw liquidity was sales liquidity, which was engineered throughout this repricing higher. Meaning, therefore we can say that the low which we were targeting was the current London low up until that point. Because what we can see that occurred is eventually that the market actually expanded even lower, creating a new daily low. So therefore, draw liquidity, London low. And we could also argue that the Asia low was the draw on liquidity, because that is what price was drawn towards. When we pay attention to the delivery, what I would like to see is that when we play the delivery just a bit forward, eventually the Asia low also gets taken out right here when this 10 o'clock candle opens low. However, ES already took it out prior, and that is why the SMT detector also showed you SMT there. And therefore, Asia low was the draw on liquidity, but failed to get reached on Nasdaq within the same period of time as on ES. But what we're going to do is we're going to say, okay, London low, Asia low, and imbalance. Think of that RE imbalance. All right, so when we pay attention to the point of interest, then the point of interest in this example was the following. First of all, it was the previous day high, as we had mentioned. And next to that, it was equilibrium of the range, meaning 50% of the range, 90,500. What I would like you to understand is that when we pay attention to when that previous day high formed, we can also pay attention to the time aspect. What I'm then looking at is I'm looking at the exact hour that this high formed, and that was the 3 p.m. hour. Therefore, this is the high of the afternoon session. So what I'm going to do is I'm also going to log that right there, meaning I'm going to log that it was the PM high. Like this, PM high. And I'm also going to type out PM low, because that wasn't in this database yet, and I apologize for the rawness, but this is what it looks like when everything is completely raw. So what I'm going to do is I'm going to post the chart in here, because I didn't do that yet, and we're simply going to be zooming in here for a moment, and we're going to be looking at the market maker sell model which was present here. And what actually would be a good tip, which I would like to share with you, is to annotate the full delivery like this, make it red to show that it's a market maker sell model, and basically to train your eye to be able to see based upon RE chart that this is buy side of the curve, sell side of the curve on the lower time frames. So here's the RE chart, I'm saving that. Keep in mind we're working within the premise of what we established on the day chart prior. What did Asia do? Well, Asia right here, I would say that this is where a bit of subjectivity is involved when it comes to defining what the sessions actually did. But when we pay attention to Asia, what I would like to see is that if we measure Asia from this opening right here at 6 p.m. to the following, to 230, which is around this candle right here, what I would like to see is that you could argue that this is a consolidation. And therefore, I'm still going to look at Asia as a consolidation, and that's how I'm going to log it. Asia consolidation, London expansion. But expansion in both directions, because London both expanded higher and expanded lower, meaning it ran up higher and then it ran down lower. Buy side of the curve, sell side of the curve, full market maker sell model. Absolutely beautiful. All originating from what? From that key level and the previous day high with SMT. Now, when we fast forward the delivery, what I would like to see is that the market eventually reprices higher and spends more time inside the daily CB. What does the market reach? Well, the market reaches our next objective. What was our next objective? Well, I outlined on this day that after that 90,500 price level, the next objective which I had for Nasdaq on the upside would be this CB right here, this hourly CB. Do you see how that hourly CB formed in very close proximity to 50% of the range between 19,750 and 90,500? What you can see is that we see the market expand throughout the morning session into that CB, and eventually we reach that CB throughout the lunch. Do you see how the market eventually rolls over right here? It's inside of this retracement that a shorting opportunity presents itself. Therefore, what we're going to be looking at is the following. What we are going to be looking at is we're going to be looking at this delivery in particular, and we're going to be paying attention to this sell program which unfolded. Why? Well, first of all, we want to define where the London high is. This is the London high. That's a very important reference point when you're looking at the New York morning session. London high. Therefore, what we see is that the market expands above the London high, reaches that hourly CB, reaches a deep premium, and therefore, when the time is right, we see the market roll over, retracing. It's inside of this delivery in particular where you see that we have this REBC which formed right here. And I know I'm making a lot of annotations now, but don't worry, I'm going to walk through it. This REBC right here, I would like you to see that inside of this delivery you are going to see a sell program on the lower time frames, market maker sell models, because the market is retracing into what? It's retracing into this BC and the monthly open right here. When we pay attention to this delivery, what we're going to do is the following. What we're going to do is we're actually going to drop into a 15-minute time frame as well, because we're going to be investigating something. So first of all, RE chart is going to get saved, and the RE chart which is going to be saved is for the April 1st right here for the Tuesday, and we're looking at the afternoon session now. So we have discussed the New York morning session, we have discussed the London session, and we're now discussing the New York PM session. Could you be looking at Asia? Yes and no. The concepts which I'm teaching to you based on time and price cycles work across all sessions. That's a given. However, I do not understand why you want to look at Asia session over, for example, London or New York AM, New York PM. And I understand the argument that it might fit better in your schedule, but at the end of the day, the delivery is not as clean as within those other sessions. So therefore, choose wisely whether or not you would be willing to look at the Asia session. So what I'm doing is I'm outlining the RE chart first of all, and we're just going to log the variables which we can see from this RE chart already. What I would like to see is that the market is Nasdaq. Newsday, again, we would have to go to Forex Factory to check whether or not there's news. SMR time, not relevant to us now. SMT, we're going to leave intact as well because there's no SMT relative to the sessions, it seems, based upon this RE chart. But when we drop into the lower time frames, we'll be able to double check that. Draw and liquidity. The draw and liquidity inside of this delivery is the following. The draw and liquidity, since we're focused on the sell model, meaning the buying opportunity into that RECB was also an opportunity, don't get me wrong. However, since we're focused on the selling opportunity, the draw and liquidity is going to be an imbalance and it's going to be monthly open. And this is one of the most important things which I would like to understand as well when you go about logging these charts, is that the amount of, I'd say, variables which you have at first within this database will increase as you proceed. And therefore, when I created this database at first, I simply put in the most simple variables. But as you go through the charts, please feel free to add more and more to them. Point of interest. Point of interest for this repricing lower is the CB, so that's an imbalance right here. And it is the London high. And we see a purge taking place of that London high. And we see the market draw back into the range which was established up until that point. Asia consolidation, London expansion, AM expansion. And you might be wondering, why are we only looking consolidation expansion? This has a deeper meaning, and when I am going to explain this to you, I'm going to do this throughout a specific lecture in the future, where I'm going to outline to you that all that matters is that you recognize sell and buy program. Sell and buy program. That's the only two variables which you need to know. Are we in a sell program or are we in a buy program? Why? Because in a sell program, every single premium array will function as resistance. In a buy program, every single discount array will function as support on price. The MXM, which we're working, is a market maker sell model. So what we're going to do is we're going to drop into the 15-minute time frame, and on the 15-minute time frame, what we're going to be looking at is the following. What we're going to be looking at, and this is why I wanted to drop into the 15 minutes, because I already knew that we would likely see this on the 15 minutes, and what I would like you to see is the following. What I would like you to see is that we have these nice boxes. These boxes are being plotted by the time cycles indicator, and I'm sure that the majority of you probably already have it on your screens. However, if you don't yet, go to the mentorship platform, go to resources, and you can find the time cycle indicator, you can find the advanced price range indicator, you can find all the stuff which you need, which is like an extra besides the educational content, which is available here on the mentorship platform. And I really suggest you to make use of those resources. What I would like to see is that we have this green shaded box. This green shaded box represents the 90-minute cycle from 10 to 11:30 a.m. This is the final 90-minute cycle of the morning session. Notice that when I outline the high of this 90-minute cycle is right here, meaning this is the AM high. Do you see how at 11:30 a.m. we opened up for lunch, ran the AM high, reached that RECB, and we then saw the market eventually roll over? Yep. That right there shows you that we purged the AM high and we then reverted towards the low. We didn't, however, reach the full low because the full low was down here, but we came back into a deep discount of the range which was established up until that point. The range being like this, the range of the previous session and the previous cycle. That's something which I didn't teach yet. However, we run the high and then revert towards the downside, drawing towards sell side liquidity. Beautiful sell program. Now what we're going to do is we're going to first of all annotate this high, AM high, and then we're going to save this, copy image, and we're going to paste this in our Notion as well. And when we go to the point of interest then, all of a sudden what we can say is, hey, we're not just looking at the London high and the imbalance as our point of interest. Nope, we're also looking at the AM high right here. And that right there is a crucial insight which I would like you to keep in mind. Now, when we're paying attention to everything which we have discussed during this lecture, during this showcase video, I would like you to understand that based upon the RE chart, you're able to see these lower time frame opportunities. Meaning simply based upon this RE chart or the M15 chart within our final example, you're able to just go out here and you're able to see market maker sell models, market maker buy models, etc. Everything which I've taught so far throughout these lectures, up until this point, all have to do with recognizing swing points. Recognizing, are we now changing from sell to buy program or from buy to sell program? That is what I want you to focus on within your studies right now. Later, we're going to dive into all of these lower time frame signatures that I'm going to share with you. But for now, focus on those higher time frames. If you have the experience already, you can drop into the lower time frames and investigate the delivery as it took place. However, I believe that for the majority of you, it's better to just train your eyes to see these bigger price swings and understand the lower time frame fractals right now. With that being said, this lecture comes to an end. I hope that you found it insightful, and I hope that everything when it comes to audio quality, etc. was good, because right now I'm on holiday whilst I'm actually recording this, but I really want to get a lecture out for the model series, so I hope that you found it insightful. Let me know in the mentorship forum if you did, and I want to wish you good luck in your studies, and I look forward to speaking to you soon again in a new presentation. Be safe.